everybody. Can you see my screen? And I'm just sharing now. Are you able to see my screen?
Not yet.
Not yet. Let me know when you can see my screen. I've
Yeah,
started
now I
sharing.
think yeah, we're able to see it. Yes.
Okay, cool. So let's get started. Let me quickly confirm if I'm recording as well. We are recording, yes. Okay. So what we talk about today, let's quickly go through this agenda. So I'll give you an introduction to the stock market, why the stock market and the potential. We'll also have a look back on what did the market do. Obviously not on a large scale, but maybe we'll pick one index which covers it all. And how to get started, what is fundamental technical analysis, what is the difference between investment and trading. I'll introduce you to charting platforms, brokers, and so on. I'll give you a brief talk about FNO as well, and then leave it for questions. So this is going to be a very brief. I mean, this does not even touch 0.01% of what stock market is. So the intention here is by the end of the session, you should at least be in a position to go ahead and confidently take a trade, be it a intraday, be it a long-term investment. You should be able to do it. So let's go ahead. So as I mentioned, the takeaway, uh, one should be comfortable to understand how to make strategical investment.
I think you're gone on mute.
Okay, I'm sorry. Is this, am I audible?
Yes, you are now.
Okay, yeah. So the takeaway is one should be comfortable to understand how to make a strategical investment in the stock market. Okay, now let's look at the stock market and how it performed over years. Like I have just drew a graph. I have taken a long-term data and I have marked it from 2012 to now. So you'd see the green line that I drew here is something called as a trend line. So what is a trend line? It's basically connecting the bottoms of the market. This may not be exactly the bottom, but what we are trying to do is we're trying to get a past strength of the market from 2012 to around about 2020. You can see, try to notice the angle of the line of the trend line. See what the angle is. Maybe it would be around about 8 degree to 10 degree. But look at what happened during the COVID times. During the COVID times, the market fell and then it rose. Now here, if you would actually see the angle of this trend line, it would be around about in 20s and 30s, something in that area. So having what do we have to understand from this is after the COVID, the market has really picked up. Even now, it is going at a very good pace. May not be as good as the market when the COVID happened, but uh, certainly, a lot better than the first so many years. So what does this actually say? This says that there are a lot of people who have come in. There is a lot of volume that has been created. There has been a lot more development in the market since what we had earlier. Okay, so let's proceed. This is a very crude statistics that I got, and I got this online. So, how does India invest? So, I've divided this like in an age group of 25 to 30, 31 to 40, 41 to 50, and 51 and above. So, here is how they are investing. Like in mutual funds, there's a lot of things going on in the life insurance because um, our parents always told us, you need to get life insurance, and LIC was the only one during our parents' days. They used to make a investments over there. Nobody really thought about market. Market still is a taboo for many, which we need to kind of start accepting that the future of everything would be in the market itself. Like um, that is majorly because you look at companies developing over a period of time. Be it take the American giants like say Google or Facebook or Meta, Tesla, all of them. You need to get a piece of what they have. So uh, eventually, when they are growing, we do grow along with them. That's what the point is. And this is how India invests. Okay. Now, when you come to the share market, you need to know how to look at things, and for that, you need to be familiar with the charting tools which are available. So, by default, your demat broker would have a charting platform within the demat broking system itself. But more advanced is something called as TradingView. It's tradingview.in, and I have quickly listed some things here. So um, let me take time to explain you what this is. So this is an instrument. Here, what is shown on the screen is Bank Nifty, and this is an index. This is not a stock. So what is an index? It's a consolidation of few or more stocks, which are like top contributors. So uh, I don't want you to really focus much on this, but for example, this one that I'm showing, Bank Nifty, this is the bank indexes for banks. So banks have come together. There would be a consolidation of banks, and each of them, according to their cap and capital and their volume, there is a specific percentage assigned to it. So Bank Nifty as such, if you see, there is a 32% weightage from HDFC, around about some 21, I believe, from ICICI, and then there are like SBI, which has got 7% and few others. I may not be exact with the numbers because after the merger of HDFC and HDFC Bank, the percentages are different, and different side shows different contribution ranges. So, but that's not important. Basically, here what I'm doing is here I'm showing you Bank Nifty, which is the index of banks. Now, what is even more worth to look at? That is Nifty 50, which I showed in the previous screen, where I was showing you how did the stocks perform overall from 2012 onwards. That gives us the entire idea of the share market because it is dealing with the top 50 stocks of Indian market, right? I would also briefly like to touch upon demat brokers. So there are full-fledged demat brokers like HDFC Bank, ICICI Securities. Kiran talked about HSBC. Then there comes discount brokers. Zerodha is top leading among them. Angel Broking, Allies Blue, we have Fires, we have Finvacia, and so on. So, I mean, nowadays it's like any other startup companies. There are brokers also coming up. Things, names that you must have never heard. Samco. There is some TradeTron. No, sorry, not TradeTron. There's something with the trade one. There is Swastika. So there are many as such. So choose your brokers wisely because all of them do charge a brokerage. Uh, and I personally recommend Finvacia because there is a zero brokerage in that. And we can talk about it as and when we really require more information about this. Okay. Uh, Firstly, let's understand what is the difference between investing and trading. So on a large scale, if you would see most of the users in the market, what do they actually do? They would come buy a stock, leave it as it is, and just go off. I mean, we would say that okay, let's look at 5 years down the line, or 2 years down the line, or some people even trade or invest for a smaller term. Like that term is called as a swing trade. So maybe for a small duration, that is like say it would range from weeks to couple of weeks to month, max to a month. So that's where they're expecting their returns. So they would make that specific move and move out of the market and re-enter when there is a good opportunity. So That is investment. When it comes to trading, there are different types of trading. Like you can trade in options and futures. You can trade in stock market, and that is on a intraday. You can also do futures and options for the stocks. So these are different kind of trading. So this is what I've mentioned here: a swing trade, which will consist of weeks to a few days to week; intraday, which will consist only of the day trading. So the catch here is, if you do not square off your positions in intraday by end of day, the broker would do it for you, and there would be a penalty as well. So in case if you're getting indulged in these kind of trading, ensure that you exit before 3:15, 3:10 to be safe, so that the broker doesn't charge you or penalize you for anything else. Okay. Now, what I would say is, let's watch a few stocks. And these are the things that we would actually need to do. Firstly, you would need to find what is the stock that you can invest on today. For that, you would need to know some technical terms which is used in the stock market. So I would teach you that. We'll firstly look at some fundamental analysis that we would do, as this session is more like a hand holding session for the newbies. So I would always say that, start with a paper trade on a stock which is like which is consistently performing, because you don't want to get into penny stocks right away and which doesn't move at all. So you would not be even able to learn about how the movements are happening and how things work. Similarly, I would help you find support and resistance levels. We'll talk a little about trends. There is a impulse trend and a corrective trend. I'll talk about that. We'll find cycles of a stock, and we'll also talk about what are candlesticks and why is it widely used. We'll talk a little about entry, exit, and stop loss and trailing stop losses, etc. So at this point of time, what I'll do is I'll go to my trading view. Uh, this is my trading view site, and I'll pick up a stock. Let's go with Reliance. Is that okay with everybody? So this is how the trading view chart looks like. Here there are few components that I need to explain you. Firstly, this is the instrument. You can type in your instrument here. Say here I'm starting with Reliance. Okay, I've picked up Reliance now. This is the chart of Reliance. Okay, and this specific portion here, I would want you to observe here for the time. So this is at 9 a.m. Okay, I have set a 15 minutes chart. This is for an intraday. Whereas if I was a long time investor, I would always look at a day chart to understand the trend. Also, I could look at a weekly chart to understand the long term trend. Hours, months, weeks. Okay, so I can change this according to our time frame. So whenever you are taking a trade, depending upon the kind of trading that you're doing, you would have to analyze the system on a a longer time frame. Like for example, if you're doing a day trading, you would watch the chart to take a decision at a 15 minutes candle, but you would look at the overall trend of a day. Similarly, if you're doing a long-term investment, maybe for as a swing trading, probably you would have to look at days and also look at the weekly chart to see how the flow is. Now, I spoke about um, trends, corrective and impulse trend. So if you actually see this trend here, which is being formed, this has made a low and this has made a high. So this one can be considered as a impulsive trend. Now this is on a weekly time frame, okay? And now this one would be considered, the second one would be considered as a um, corrective trend. Now traders, what you would expect is, you would expect this is another low. From the low, it has made a high. It would make a low. Again, it is expected to go at least the same length as this one. So If you were to be drawing a future chart, probably it should look something like this. But again, this is not the low, or we have really not identified this is the low. There are various other factors that we would need to figure out to identify what is the trend and what is the corrective action and how far would it go. So you can, that's what we call a support and resistance line. So now if you're looking at slightly longer period, what you're looking at right now is the chart from April, somewhere around March. This is April, 28th March. This is 4th April. So from here, if you would see, this is the area where the market is giving a, it is trying to create a resistance here. So I draw a line here and I say that this is the resistance that I've identified. Similarly, what I can see is the market is bouncing back each time it is coming here. So I would mark this line as well and say that this is a resistance line. Okay, don't worry about the tools usage. Anybody nowadays can use tools. So these are all available here to draw a line. This is what I drew. This is what I drew. It was a horizontal line which is available here. A horizontal line. You can draw trend line. You can draw a parallel regression channel, so on and so forth. I'm not focusing much on that. The idea is to get you the logic of the entire flow of how stocks work, not how trading view works. Okay, so what we discussed here was firstly, this is the symbol or instrument, whatever you want to call it. This is the time frame. Now I would introduce you to open, low, high, and close. These are four parameters which every candle has. I'll come to the candles too. So let's take this candle for an example. This is a weekly candle, and this is on the week of July 3rd, as you see here in observe this portion. So you would see that it is on Monday, 3rd of July, and this is what we got. So if you look at the stats here for this specific candle, it opened at 23.22.35. Observe the position here. So 22.35 it opened. It made a high of 2419.4. It made a low of 2319.9 and it finally closed at 2390. So what does this indicate? So this is what a candle is supposed to look like with four parameters. This could be different on a different time frame. Now this was a weekly one, but if I look at a daily one, it would be different. It would be for one particular day. So again, going back to that July 3rd, we got different parameters here. It would have opened on a same note, but the high and low, the close, those would all be different when you look at a different time frame. Is this clear, guys?
Yeah, sure.
Yeah, Dinesh.
Okay, thank you. Let's go back. Okay, so um, now what we did is we briefly spoke about the trend, the impulse actions, the corrective actions. Then again, it would create an impulse, create and it really doesn't have to really do a complete impulse and a corrective in a proper manner. It is stock market, it is bound to move, but it will never move in a straight line. It would always go zigzag. All right. But majorly what we have identified is this was our long time resistance and this is the long time support. This is a long time support. This is a long time resistance. And we should ideally look out for trades in this way. Now, if you actually want to see about, if you actually would talk about Reliance is on a good support zone. So now, if on Monday or Tuesday, when the market opens, if we find that, the market is moving towards upside, this is a good buy opportunity because we have identified that Reliance right now it is on a strong support zone where it has taken support multiple times and moved up from here. So what you would ideally do is you would keep this as a target, but this is too big of a target. 2345 onwards to 2580 almost, it is a 250 odd points target. So do you really need to keep such a big target? Although yes, you can keep, if you're doing a swing trade, I would suggest, if you're doing a trade, a day trade, divide it into percentages and book. I mean, try to book it at every 5 or 10%, or howsoever you feel you are comfortable with the profit margin. But overall, uh, if you see here, the market moved up here, came down here, moved up again. It came down here. It didn't come all the way up till the support. It moved up again. It came down. It moved up again. It tried to, came down a long way. It went up. It moved down again. So there is definitely some or the other price action being built, or you can say a trend being built. Here there was a correction. There was an impulse. There was a correction. There is again an impulse. Now again we are expecting it to go like this. It comes down, it goes up, it comes down again, and finally reaches the target. May not be just a single or a two times dip and rise, but there could be multiples. It really depends upon the market sentiments on that particular day. But overall, this is how you would expect the market to move.
So
Any
I have a
doubts so
quick
far?
question here. Yeah. So see, what you're right now analyzing is Reliance stock, correct?
Exactly. Yes.
Now, will you be able to draw a parallel with how the Nifty or the Sensex is moving, and is there a correlation between the two?
Okay.
Because
So
this is
logical.
also a Sensex stock.
Yes, yes. So, firstly, let me tell you how Nifty works. So here, what I did was I am looking at Reliance, which is a multi-business industry, right? They have telecom, they have petroleum, they have everything in the world that you would talk about. Okay, so uh, and moreover, they are the biggest contributors into Nifty 50 as well. So let's now watch Nifty 50. Okay. So here is the Nifty futures. I'll find the Nifty spot. Okay, I'll talk about futures and options futures when it comes to the futures and options. This thing slide. So this is Nifty chart. Okay, again, the analysis is just the same like we do. What I've done is I have taken firstly, assume that I am going to trade on a daily basis. Indexes cannot be traded on a daily basis. You would have to invest in futures. Okay. But the spot chart is always available for us to have a reference of. So I'll firstly go by weeks. So here I'm finding a very good trend here. Nifty is on a uptrend. Okay, now there is something new that I wanted to introduce. I am going to draw a trend line here. So what is a trend line? Trend line is a line that connects all the bottoms or the maximum number of bottoms that you can have. So this looks like a pretty good trend line. So what does this also act as is a dynamic support. So what I'm doing here is the bottoms are being joined. As soon as the stock reaches near the bottom, it goes up. Here, I find a trend that it has already reached the bottom and it may break this bottom. So the traders, what they do is, if there is a breakdown of this particular trend, it means that the market is going to reverse from here. That's how traders consider this as. Is this clear, guys?
Yeah, sure.
Sure. Okay. So I'll move back to the daily time frame. So here on the daily time frame, what you would see is it has already broken this trend. Okay. At the red candle yesterday or Thursday, it has already broken the trend, and on Friday, the last session, we found that the market tried to pick up, but understand the sentiment here. Okay, so you see a strong red body, a red candle here, followed by a slight wick. A wick is nothing but a tail on the upper side as well as on the lower side. All right. So now what does this actually say? I mean, every candle has a psychology of its own. Okay. So what did it say is it opened on a high here. Okay. And the sellers were so strong on this day because we were watching a day chart. The sellers were so strong on this day that they brought the entire market all the way down up to, this was the low, 19492. It brought it all the way up till here. Then sellers tried to pitch in from here and started buying. Only then it went up and closed a little. So if you are actually watching the market the entire day, you would see that you have a little bit of hope that has already been built here, saying that okay, now the sellers were very active, they got exhausted today, and now the buyers are trying to pitch in. So stock market overall is just a tussle between buyers and sellers. There would be many buyers, there would be many sellers, and both of them try to control the market in order to win on that particular day, or that particular hour, or that particular candle. So that's how it works. Let's take another example. So this candlestick is actually called a doji. Okay, these are some Japanese terms for candles which have been named. The candles overall is derived from the Japanese market. Okay, so what does this specific candle say? It opened up, the sellers tried to bring it down, but the buyers got so aggressive that they went and tried to close it almost close to the open. So what does this ideally mean is the sellers were active earlier. They tried showing strength, but buyers overtook them. And during the last phase of the market, they would have they tried to bring the market back up, and they closed it. If not above the open, it was very close to the open. So how is this candle decided? There is a simple formula. It is like open. If the open is less than, if the close is less than the open, it would be a red candle. If the close is above the open, it would be a green candle. Like in this case, it opened here and it closed here. It it has got a wick. It has got a wick on the top also. So overall, it did close as a green candle. This is all clear till now.
Yes.
Cool. Okay. So, okay, just a disclaimer. I don't know how am I performing on teaching. I don't usually go ahead and take classes or anything. I'm just trying to apply my knowledge here, whatever I have learned, and try to uh, make you comfortable with how things work in the market, right? So let's go back. We'll pick up a stock to analyze. We did watch Reliance. We did watch Nifty. Okay, yeah, you were asking about again drawing lines to figure this out. So here, as you see, this level is something that the market is respecting a lot, right? So what we would do here is we would go ahead and draw a line. We would go ahead and draw a line here and mark this as our support level, and probably this portion is what we can mark as our resistance level. But I mean, it has respected this a multiple times, but the resistance had been broken also. At this point of time, when this candle closed above the line, it means the resistance has been broken. But again, it did travel a little and then it started coming down. So what I would be expecting for Nifty is this is on a long term basis. Okay. So punters even now in the market. Yesterday I was reading that Nifty is supposed to be going till 21K, that is 21 is here, by Diwali. This is what we are expecting. But on the other hand, we have news from US about a shutdown and so on. So let us see how it performs. I mean, again, we have about 2 to 3 months, sorry, not 3 months, but almost 2 months to go for Diwali. So between that line, it would make a impulse, make a correction, make again impulse, make correction, and then finally hit 21 odd by Diwali. That's something that's on cards. Let's see how that works. Okay, so again, right now, what we are looking at is a support level for Nifty, because again, at this level, you found that it has got a support here. It went up. This could be called as minor supports. This could be called as a major support. and this could be called as a major resistance, right? So this keeps on going. The other funda in the market is, say if it has broken a resistance earlier and then the market would come down, try to touch that resistance and then go up again. So what ideally happens is the earlier resistance which was broken tend to become a support in the long run. So that becomes an important level where the market would turn. So why does the scenario happen? This is because there are heavy investors in the market in forms of, say, mutual funds, in forms of foreign investors, domestic investors, the big trading houses. All of them, they would be buying at a certain level, selling at a certain level. So there would be some or the other bigger buyer sitting at that level who would have punched his order like in crores or in lakhs. So will all that orders be fulfilled at one go? It may not be. That is the reason that it takes multiple, whenever you hit a reversal spot or support spot or a resistance spot, the trend seems to change from there. That is the reason why it changes. All right, let's go back. So we'll look a little about how do we fundamentally analyze the stocks. Okay, I'm not a big fan of this. I myself, I do not trade much in stocks, but let's go ahead and look at it. I have a site called screener.in. Okay, I'll search for any company. Name a company of your choice, anybody. No one, nobody is getting a company. Let's go by Reliance then.
Yeah, yeah, you can go by Reliance, or you can probably look at maybe ICICI Bank.
Okay, let's look at ICICI Bank. It always doesn't have to be my choice, right? Okay, so you got a brief about ICICI Bank here, the market cap, the P ratio. I am not an expert in reading the financial reports. I strongly, I mean, there is a partner of mine who does this job for me. But overall, what I would say is, let's look at just this column. Okay, let's just look at how was the net profit, overall net profit. So you would see in June 2020, it started from 3.5 thousand crores, 5.4, 6.2. We would have seen a dip here because okay, sorry, this 2020 was the dip, sorry, the COVID period. So you would see that, let's look at only this column, and we are seeing that it has been continuously increasing, like 6,000, 8,000, 7,000, 8.3, 9.1, 10.2, 11.1. So at this point of time, ICICI is looking strong, and it could be invested for a further. Now, if you would actually observe the chart, let's see from December 22, September 22, December 22, March, June onwards, on ICICI Bank, you will find that it is definitely going up on a longer time frame. Let's look at on a weekly basis. Or better clarity with so looking from December 2020 onwards, we're looking from 2020 onwards. 2020 was here, there was a dip, and then it has actually kept going up. All right. So this is how ICICI performed, and this is basically the entire performance of ICICI market. And uh, take some time to kind of read the entire chart. You can log on to screener.in and look out for any company. Does anybody know about a penny stock? Maybe anything that we can look at, just for example, so that you know we can
Yeah,
we
you can
can
look
see.
at probably, yeah. You can probably look at something like a Alok Industry or something like that.
Alok Industry is still not it's not
Still
a
not
penny
a,
stock. But
it's probably,
uh, yeah, but
yeah,
it has
okay.
been in the market for quite some time. No, I just wanted to kind of, okay, profit before taxes, net profit. If you still look at this one, it is fairly okay, but then the company wasn't doing as great as before, like from what we have in June 2020. So it has been decreasing. So the stock also would have been going down. Okay. What I really wanted to show was, or I wanted to make you aware was of pump and dump in the market. So
Can
uh,
we see Vodafone? Vodafone, that's as well is a penny stock, right?
no,
Vodafone,
one of
yeah, but these are
volumes are very high.
yeah, the volumes are very high, and these are the traders' favorite stocks.
Hmm.
Vodafone, PNB, these are all
Hmm.
traders' favorite stocks. Okay,
So there is
so
Bandari Hoisri, that's also a penny stock. Can we see that?
Bandari is not even listed here on screen.
Yeah, there's a company called Bandari Hosairi. I think they are
Yeah.
into,
Oh, here it
I
is.
think,
Oh, it was BH, which I let's look at the profit and loss statement. So the net profit has been consistently increasing, like it was a gradual increase only. So 1.8, 1.81, 1.77, 5744. It's still in that same range. So let's see how it was doing on the market. Diary history. So it has just moved in between 0.55. Okay, actually, you would have made a fortune here if you would have invested somewhere here in 20 and booked somewhere here at 10 also. This is 10 rupees profit, which is more than like this is more than like 200% or 2000%,
yeah.
right? Yeah. But all in all, just imagine the wait time here. Say you had brought somewhere here at the hopes of it going up. This was in April 20, right? And you would have to wait till 22. It did give very good returns, but um, it it would just test your patience. How long have you kept it waiting? Okay. So my initial suggestion is, at least when you are learning to trade, don't go for this penny stocks. You can go ahead with any of like ICICI example. ICICI Bank example was a good one, where you could see that it has been consistently growing and it still has hopes of growing further. So let's go ahead. Let's target stocks like those. Okay. Now, any other questions? Like let's try to move forward.
Yeah, sure, we can move forward. Yes.
Okay, so here, what did I speak about? We spoke about how to analyze. We did a little bit of fundamental analysis. I'll teach you how to assign some basic indicators and what is the significance of these indicators. Okay, we drew a support line and a resistance line. We talked about impulse and corrective, and we'll also look at how cycles are formed in the market. And we did speak about candlesticks and why is it widely used. We'll talk a little about entry, exit, stop loss and trail, and we'll also talk about scanners and the coming this thing. Okay, so first let's go about adding an indicator. So what is an indicator actually? So just before that, I'll pick a much more stable stock, and this is on a monthly chart. So um, what we understood here was the market is moving. Okay, and you with the naked eye, if you would see, you are just seeing reds and greens. So you need a assistance on how to enter into the market, enter into the trade or investment, and also try to exit out of it. Okay, So the major thing that everybody uses, or by the means of it, you would always say that you would take an average of everything and then proceed with it. So uh, what you can actually say is the stock was performing in a downtrend. When it moves out up, you still don't know what is the strength that it has gained. So you would kind of want to assess a moving average for it. How does it move? And what is the average? And you have to ask yourself a question: is the stock trading below the average or above the average? Right? So for that, what you actually require is just to plot a moving average. So I have an indicator here. This is only for example. This is not a trading tip at all. And I would say moving average. Okay, now there are different types of moving averages too. Okay, uh, I'll choose moving average exponential because that gives more weightage to the ones which have recently closed. So, and what I'll do is I'll add two of them. Okay, these are two of them, and I have few settings to change. Okay, now why am I changing these settings? So there is a golden ratio rule which goes on in the market. This is a common trend that is followed in the market. So that is called a golden ratio crossover. That happens at a moving average of 50, and this is going to be a faster line, so I'll make it green. Okay, and the slower line, the slower moving average would be of 200, and I'll mark this as say red because it is slow. Red means stop. Okay, so what am I getting here is two lines and the way it is moving. Okay, now HDFC has been falling down, but there is news that okay, I just seen the news this morning. Fell HDFC Bank by. If I show you this, uh, okay, I'm not sure where exactly did I read it, but there was a news that IIFL is still buying. IIFL is a trading house. You all know them. So the CEO or one big shot, he came up on the news and said that HDFC still is a good buy, and it is a right buy time because it is having a dip and it is going to rise from here, and they would keep it buying till the end of next week. That's what they mentioned in their quote. So what do we see here? We see here that the green line is still above the red line. What does that mean? The 50-day moving average is greater than the 200-day moving average, which means the stock still is on a higher range. Okay, it is still a good stock to buy for a longer term. This is absolutely from a longer term. Okay, I would see from a day perspective, I would get a slightly different perspective when I look at it from a day's perspective. So um, from on the monthly chart, it did look like the green line is totally on the above and the red line is far from there. But on a daily chart, it looks a lot different, right? So if you're doing a swing trading, probably at this point where the green was starting to come down, you would have looked at selling this position, and or if you're holding the position, probably exit out of it and re-enter it when the green is crossing the red one. Does this make sense? Hello,
Yeah, yeah,
everybody with me? Yeah.
yes.
Okay. So let's see, where did it give a purchase or give a buy order? So it gave a buy order here. Okay, this was somewhere in September 2022. Okay, on September 2022, the green line has cut over the red line, and it said this was an indication that the market is in an uptrend. and it kept going up. It did. So as I told you, there are impulse actions, corrective actions, impulse again, corrective, impulse, corrective. This is also considered as a corrective on a lower trend. So if you would actually consider a small trading period over here, you can consider this as the top. And when it comes down, you would mark it as the impulse, corrective, impulse. Then the trend has changed again. It has started going up. This is a big impulse. This is a corrective, impulse, corrective, impulse, corrective on the other side. So uh, this seemed to be, kind of not a very good technique, but remember, I'm looking at it from a day perspective. Okay, it changes as and when you change the time frame. Okay, so anybody who's looking at what is your horizon in the market, if it is for a longer time, you trade or you look at the chart at a different time frame. Whereas when it is a shorter time, like I do intraday, okay, I would look at 15 minutes chart. Okay, on a 15 minutes chart, what was this was the last trading session. So as per the rule, whenever the green line is below the red line, this is a bearish market. So you would only look out for options to sell. I mean, uh, you'd look at selling only, but not look at buying. But you can't sell from anywhere. You can't sell from the first candle. You'll have to wait. You'll have to figure out where is the top made, and based on that, take a call, because this was the top made. After that, immediately I got a big red candle which overtook this. So again, if I were to really talk about this, this could be considered as a bearish engulfing candle. This has totally taken out whatever this candle had in terms of buying. This candle has to, or the sellers here have totally shown strength in bringing the market down. But towards the end of the candle, there were buyers who brought it also. So there was a buzz again, and then this is how the market traps you. Actually, you get different perspectives here. Um, you got a big red candle here where it indicates sell, but then it tried to sustain, it tried to bring up, but again the market came in handy. I mean, the sellers came in, they tried to bring the market totally down. This is how it totally follows. There are many other techniques on how you would find the support and resistance. Basically, this is also a support and resistance at a lower level, right? This is on a day level. You have to find a support and resistance. You would have to depend upon either indicator drawings, or you would have to depend upon trend lines. You would have to depend upon various other ways to draw a support and resistance line and take a decisions accordingly. Um, I depend upon something called as option chain. I don't want to show you that because it would be too overwhelming. Somebody who has seen option chain before can make sense out of till where the market would move. So uh, I would keep that to another day. I really don't want to get you into the option chain because you'd go bonkers on that. Okay. Next, let's see. Okay, now let's do cycles. How do we find cycles for the chain? So what you do is we take a longer time frame. Say like let's take a monthly candle. This is also a very crude way. Okay, so uh, you take out any there is an indicator. Sorry, somebody said something. Okay, so there is something called as cycles in the market which can be drawn here. Okay, so I take a cycle and I take a low from here. This was the biggest low that has been made, and I take a high from here, high till here. So this is in a way a short cycle. Now, if you would see, there would be something or the other happening in this cycles. So this is the up, this is the lowest point, this is the upper point. From here, whenever we find that the stock is coming up till here, this has created a resistance. So it is expected to go down from here. So again, what we would decide upon is the next cycle, which would fall on, say, May 1st, 24. This is where we see that there is a cycle being formed. So what usually traders do is, whoever does a time-based trading, they would look at every candle which forms on this particular cycle, and based on that they take a call. So what they ideally do is they would mark a high and low of this particular candle, and whichever side it breaks they would go and trade that side. So this is again on a shorter time frame. This is uh, just a trick in the market that is being used. There is no hard and fast rule, there is no holy grail in the market that only this particular one will make a profit. Okay, so at every point of time, whenever you take a trade, I would say that it is as good as tossing a coin up in the air. It may come down heads, it may come down uh, tail. So when you enter a trade with all your analysis, you still need to keep in mind that it can go either way. So how do we protect that, or how do we protect us from a loss? So whatever you say, I mean, say, as per your analysis, this was a resistance point. Okay, so at this point of time you are taking a sell trade. I mean, everybody is comfortable when I say sell trade, because uh, our major understanding of the market is buy low, sell high. But there is also a concept of selling high and buying low, which essentially comes in trading. So uh, is everybody comfortable when I say I am selling here, or I'll take a buying example?
That's
Comfortable.
fine. No,
Yeah.
you can go ahead. No
Okay.
issues.
All right. Cool. Okay. So assume that, just because the market is at the resistance level here, and this was my resistance level. Okay. So here, what I'm going to do is I'm going to sell few of HDFC stocks. So right now, let me push it a little more up, because the most closes are here. I mean, the close of a candle is here. Okay. So what I do is I take a trade here at 1624. 1624 is the price that has been done here. Now, there are different ways on how you can calculate a loss that you can take. First is you go by your mental state, saying that I would not take more than 10% loss, or I would not take more than a 2% loss on any trades. That is my hard and fast rule. Okay, so what you have ideally done is you have firstly identified the stock, you have identified the stock by drawing these lines, the EMA lines, and you get to know that the resistance has hit a couple of times, and this is a strong resistance. Now it is time for me to sell the stock, or if there is a buy position that I was holding as a positional trade, it is time for me to exit out of it. This is how you analyze it, and you have come to a conclusion that right now I have to sell it or exit out of it. If you exit out of it, there is no more liabilities. The one that you purchased low, you have booked on a high and you are getting out of the trade. All right. But when you are going to sell it, what you assume is you have sold it here and you need to decide upon a stop loss. So as I said, mentally you say that, okay, I am going to bear only a stop loss, only a loss of 5%. So you can calculate your 5% from here. So assume that it is somewhere around 1600 I took a trade. 5% of it would be, say, 80 rupees. So I would go and mark a 80 rupees stop loss here. So 1620, assuming that it is 1620, I'll put a stop loss limit of, say, 1700. That is 1620 plus 80. I have put a stop loss here. Okay, the second line here is my stop loss. Okay, so you have traded from here, and as soon as it comes to 1620, you are going to sell it off. Now, what do we do about taking profits? So there are again different techniques that we can use. One is you can say that, if I'm taking a 5% loss, I need a 15% profit. So again, you calculate 8 3s are 24. So go 24 240 points below and mark a profit point. Okay, so what you're doing is for every one time of the risk that you're taking, you're going to collect a 3 times profit. This is just a logic that you have created for yourself. Okay, uh, it would vary upon person to person how they look at it and how do they want to do it. But what I would say is, why don't we do this? We have the golden crossover, right? Let's wait for the crossover. Let's say we do it on a daily basis. Let's book our profit only when the crossover has happened. Like, where did the upward crossover happen? Somewhere here. That time the profit was 1430. Okay, I kept on holding it from September 2nd onwards. I kept on holding it, and now is the time when I am booking a profit or going on the sell side. So 1420 or something that we marked out to 1605. This is the profit range. So is this pretty good enough when it comes to when it comes to a normal profit booking? But remember, you had to wait for a longer time, right? From 22 September 22 to now, that is almost a year. But is this a good enough profit to kind of consider?
So what's the approximate percentage?
So you can
So
calculate that, right? So around about say 1433. Let's do the math. Got 1433.
I think 1602 was the profit booking time period.
1620 is the profit, say for
1620.
example, is equal to this minus this. We got a profit of 187 points. Now let's
Yeah,
say
I'm
it
talking about the
is,
percentage.
yeah, let's talk about the percentage. So 187 points. So what would be the formula? 187 into 100, sorry, upon,
187 divided by the buy price into 100.
yeah, my bad, 21620.
No, no. 187 divided by
Mhm.
the buy price into 100. That should give you the percentage.
Yeah, profit is close to 15. Yeah.
13 odd percent.
So it
Is this
comes
a
to, yeah,
good
around.
profit?
What is the time period we're talking about here? 1 year, is it?
1 year, 1 year,
And it's coming to 11, 13%.
13%. Yes.
No, I would say no.
Okay. Individual choice, I would say. Okay.
Yeah.
Right. So now,
Because,
so
I mean, if you look at a mutual fund, for example, I'm just giving an example. I mean, that
yeah,
should probably give you a
absolutely.
better return than going through
Hmm.
this risk, right? Yeah.
Yes, exactly, exactly. But this is one of the portion that you've seen. Okay. But here, what did I do? I just let this indicator tell me when to buy and sell. Right. But what if I followed the same indicator, but I seen that, it is falling down from here. The moving average is trying to go down here. I booked here at say 1625. This was almost in Feb. So last September to Feb, say around 6 months, 6 7 months. In
Right.
7 months, I almost did. I could say 11% odd.
Or 5 months it is actually.
Huh. I'm just trying to go by rough figures, not calculating
Right.
it. Okay. So I'm pretty good here. If I want to book it here
Hmm.
or somewhere here when it is trying to fall down, I'll book it here and I'll wait for another opportunity. Okay.
Right.
Now, okay. you said that it didn't work out well for you in this particular scenario. This was a day
Correct.
trade, remember? So now
Hmm.
let's say that you want to do a little more better. You look at 4 hours time frame. Okay, you will get multiple buys and sells here now. Okay, it is on the swing trade itself. You're going to buy here, somewhere here, when it is going to closely touch this, or uh, big. Let's start from here itself. 22 itself would give a buy, but then you exited many a times whenever it has reached up. You exited here. You again brought it here because you found it rising. You sold it here somewhere. It went down. You still waited. You did multiple trades here. Okay, the profit would be something very different. It is not going to be restrictive to 10%, 13% or anything. It would be a little more different because you got profit in interims, right? In this meantime, you were smart enough to go ahead and find another stock also, which gave an opportunity to you while you were not parking your funds in HDFC, right? That also can be done. But all in all, uh, this is just a strategy that I have discussed. Okay, it may work out differently in different stocks. Every stock should not be considered like this. But let's go on an index level at a very long term, like Nifty. If I would have followed this approach, and I would go very long time. Okay, I mean I'm a trader who just invested and forgot about it. Okay, the charts are still not there. Just remove all the drawing. Okay, now okay, this was a day chart. I'll go to the month's chart. Just move down. Why? Okay, sorry. Let me just close this, start a fresh one.
So another quick request, Dinesh, is there a possibility that we can break this session into two parts?
Oh yes. Okay. Really didn't look at the time. So
Yeah.
okay. Do you want to have a
Maybe you
follow-up
can
call?
probably stop it at a specific level, and then
Okay.
we can again connect probably one another day this week, or maybe Monday is off. So probably we can connect on Monday. I mean, if everybody is okay with it. Just a request.
Yeah. Okay. So let me see what I have. Okay. I had indexes. Introducing you to options and futures as the next topic. And
Fernando needs some time.
oh yes, certainly. I mean, I'm not
Definitely.
even going to talk about FNO as a whole. I just wanted to introduce to you कि होता क्या है इसमें. All right.
Right.
So I have completed like 9 slides. Here we have almost
Okay.
got everything except for scanners. Okay, I'll quickly tell about what scanners are. Okay.
Right.
Now, the logic that I mentioned, right? The 50 crossing over 200, that can be applied. I mean, there are like 5,000 stocks. Can you go ahead and look at all the 5,000 stocks and figure out where the crossover has been done? We can't. So there is a site by the name Charting, and we would we would go ahead and run a query based. based on the charting at charting based on the same logic. I said EMA close 50 period crosses above EMA 200. Okay, and I run a scan. I get a few of these stocks. So these are the ones who have crossed from bottom to top. So these are the ones that you can look at as a potential buy for a long term. Okay, so
Yeah.
just to introduce you, there are many other scanners like this on many other conditions. Like the conditions are like too many. So this is in the cash segment. But if I want to, restrict to Nifty 200, top 200 stocks itself, I may not get
Hmm.
any results. Yeah, but that is quite possible to filter. So you don't, or you go by cash itself, run a scan, you would get too many, and you would put another condition saying that I need a bigger volume one, where volume greater than, I would say, like I wanted, but this is 5 lakh, say 50 lakh. I've put a condition like this, and it would bring up accordingly. This has to go off. So basically, this is where these scanners come in handy in order to select the stocks. Yep. So I looked out for something which has got like what 20 lakhs. 20 lakhs should be the volume. 20 lakhs or more should be the volume. So this Nippon India ETF, this is the one which has just crossed from bottom to top and looks like a good buy. Okay, so this is how you use the scanners. You can note down this site charting.com. There is also
Right.
screener.in that I spoke about, and we also spoke about
Right.
TradingView in order to plot our charts. So we'll stop here at this, and probably as per your interest, we'll decide upon maybe Monday is a good day for me as well because the markets are not open. I can spend some time and we can talk about futures and options then
Sure.
if
But see,
everybody is good with
whatever
it.
tools you're using or whatever charts you showed, these are all like the paid ones, or this is free to use
No.
ones, or is there any
Okay.
recommended paid ones? Like
Okay. These are free. TradingView is free. Screener is totally free unless you
a
need some
screener, I
financial
have.
statement.
Yeah, yeah,
Yeah,
yeah.
financial statements of the company, I think you have to pay. I mean, a
Okay,
detailed financial analysis of a company that for that you would have to
right.
pay. The charting is a free tool as well, unless you're using it for trading, because the charts gets updated only by I think there is a 15 minutes delay in charting. So if you're using it for investing purpose, you can simply keep using it without any problem.
Okay.
Only if you're going into trading, I would suggest you not to use charting or go for a paid version of it.
See, for example, my demat is with ICICI. Okay.
Mhm.
Is there do they have any good tools for day trading, like where you get all the charts or all the analysis and trends?
Yes,
Are you aware of
every
anything?
yeah, every
Yeah.
see every this thing every
Demat
demat broker
provider has. Yeah.
yeah has a charting system which they would either integrate with TradingView or they would also integrate it with Chat IQ. There is another
Okay.
company called Chat IQ or IQ Chat. Yeah. So these are the two major charting systems which are available, and the flexibility that I have with this thing is, I write my own scripts here. So
Yeah, okay. Okay.
okay, I mean I do a lot more than just this. I do a lot of algo, and I create signals and so on and so forth. So
Right.
yeah, I extensively use it, and hence I've got a premium version of TradingView. Okay, so I
We'll
wouldn't.
talk about this. I think after the session is over, right? The next session probably. Then we can see how we can probably you can assist. Like, I think I saw some messages in the group. Unfortunately, I didn't go through it, so I didn't know what exactly was happening.
Yeah. Okay.
So
All right. So it's too early to speak about it,
yes,
and I wouldn't
right,
want anybody to come into the system without knowing it, right?
correct,
So that is my first
100%.
conscious effort to have people know about what you're going to do, right? And
Yep.
this was just what tip of the iceberg. So
Right.
let's take baby steps for those who are interested. I can help. Yeah, to I mean manual, yes, I can totally do it. And when we look at automation, there is some charges applied to it, which we can talk
Perfect.
if you are interested. I don't want to sell my product really, but
No,
I
that's
just want,
perfect.
this was a helping hand really.
So, but tell me something like if I use your platform for day trading, for example, now
Mhm.
will this get integrated into my demat,
Not
or
all
you
the
need to create a separate demat?
are integrated. I have specifically done Shunya is one um, broker which I have integrated with. There are reasons to it behind why I do it. So as you know, trading is firstly FNO is costly. Like others, they charge from 20 to 40 rupees per trade. So which means when you buy, you have to pay 20. When you sell, you have to pay 20. Overall, it becomes 40. And then there are brokerages and all in all, when you buy and sell a stock in other brokers like ICICI Direct or Fires or anybody, they charge you somewhere around 200 rupees for it overall.
So
Okay.
for this,
And
like for example, long-term trading, like ICICI, I use the ICICI demat account, so I have that
mhm,
some subscription-based thing. Okay, it's like 0.15% or something like that.
true.
Okay.
Yeah.
So I think they
hmm
also have some subscriptions for F&O as well as intraday and stuff like that. I don't know, I mean, how the
Yeah.
brokerages work there. I've not tried that. But the only
hmm
question I was asking is if you have to use a third-party tool, like whatever you were
hmm
showing, if it doesn't
hmm
get integrated with the current demat, then like fund transfers and other things could become an issue, right? Again, you need to link your bank accounts and probably do all that stuff, correct?
Yeah. Right. So see, at any point of day, at least in these days, opening a demat account is not a problem at all.
Yeah, that
You
is
know,
right. Yeah.
Yeah. I have like, I mean, I do a lot of coding and stuff, right? So there are many brokers who provide me different sort of data in different ways. I have a account open with them. As far as they're giving me this for free, I'm just good going and opening an account with them. For the fact that I don't trade with them, it is still okay to just go ahead and create a demat account and use it as per your needs.
So can you have multiple demat accounts, like any number of demat
Of
accounts? Is
course,
there a
it's as
restriction on
good
that?
as
Okay.
yeah, it's as good as having a
Bank
bank
accounts.
account. Yeah, just
Okay.
as good as having a bank account. You can have multiple bank accounts, right? All that you need to
Because
do
what
is
happens
when
is
you
like when you're filing
uh,
your returns at the end of the year, you need to consolidate all the statements, and that becomes a little bit of a pain
yeah.
at times.
So see, usually, or at least me, I have not done filing by myself because there is a lot of FNO transactions which goes into a different
Correct.
level of filing. So you need a CA for it. So what you do is you download all your
Correct.
statements from different
CA is
brokers.
definitely required. Yeah. Yeah.
Yeah, give it to
Yeah.
him. He would file it for you. Okay, and this is a blessing that all these FNO trades are supposed to be considered as a business gain. Okay, so what you're actually doing is you're doing business when you're dealing with a short term capital, be it intraday, be it FNO. So you can show all your expenses. Like say, even if you brought a system for yourself, you can show that under expenses, saying that this is contributing towards my business. So your
Right.
CA should help you with that. For that matter, even stationary, you can even claim your electricity bill and
Yeah,
water bill saying
that's
that.
not an issue. At least in my
Yeah, I
my
mean,
case, that's not an issue because I actually have my own company, so everything will be billed to
mhm,
the company for GST and the depreciation or whatever it is. My only question
wonderful.
was like having multiple demat accounts shouldn't be an issue, right? That's all.
No,
That's the
no,
only
not at all. Okay, for you, I would also just because you said you're having a company, right?
thing. Right.
What I would suggest you to do is also open a demat in the name of the company.
Hmm. Hmm.
You can do that.
I can do that, but it requires my other directors' approvals and all. So
Right.
anyway,
Yeah.
that's
Yeah. I'll tell you why. I'll tell you why. Even I have a startup, started for this purpose itself. So
Hmm.
what I'm going to do is the funds that I receive. Do you get interest on your company account? You don't get interest, right, from the bank.
No, that is only if you're parking it in some bonds or if you invest in any of
Exactly.
those
So,
debt
but
instruments
that
and
is
stuff like that.
that
Yeah.
is another level of investment, right? So Instead of that, when you have this amount sitting in your bank account idle, instead of that, put it into these demat accounts, and we can run a very safe strategy which would give us very minimal returns. Like say, I was even looking at 4 to 5% a month,
Mm.
that kind of returns by
Four to
actually
five
not.
percent is still decent, pretty
Oh,
decent.
it's more than decent actually, because if you
Yeah, yeah,
look for a yearly thing, it would be around about
right,
48%. Okay, so
correct,
there are option selling strategies that you can apply. I can talk more about it when we speak options.
right.
So, that kind of becomes like a very safe investment. Some people who have like a very huge capital, like a 50 CR, and they even go for like 1%. 1% is far more than enough for them, you know,
Right.
and yeah, that's how they target too. So yeah,
Sure, sure.
opening multiple demat accounts is not a problem at all. So
Mm.
what I have done in my system is like I have been doing testing with Shunya for options buying, but for option selling, I would do Fires. The reason being, again, Fires brokerage, when it comes to the brokerage, um, I would be doing sell pretty less. Option selling would be done on a lower limit or lower quantity than options buying. So it would actually be in a ratio of say 4:1. Wherever I'm taking 4 buy trades, I would hardly be doing one sell trade. So sell trade usually goes for days and days together. So I would. I don't mind paying a small interest to them because
Right.
it may not interfere with my systems. Like options buying and sellings are two different strategies. I don't want them to overlap. Hence, I've kept it like that.
So, but then, like most of these brokerages are based on the number of transactions, or is that on the volume? By the sense, in the it's based on the amount.
No, it is not based on the amount. Amount is a small place to play in it, but assume that you are doing a one lot transaction 4 times. That would charge you like say 200 into 4. Okay, rather
Okay.
than if you do like 4 lots in one single go, it would charge you like the same 200 rupees.
Okay. Okay. Got it.
Mm, yeah, and the
Cool.
brokerage would be on the profit and however the broker defines the percentage.
Cool.
Hope
That's
this was helpful. This session was helpful. I would want you to tell me if you need anything else. Options and futures are one thing that we have still not touched upon. So
right.
we'll talk about that in the coming session. But apart from that, anything that you require with the topic that we discussed right now, I'm open to discussing this.